MicroStrategy just kicked off 2025 with explosive growth. A record $21 billion stock offering, 301,000 new Bitcoins added, and a 50% jump in share price. But what does this mean for the future of Bitcoin Treasury adoption? And should investors be paying closer attention to Strategy, the world's first Bitcoin Treasury company? Let's start with the numbers. In Q1 2025, Strategy, formerly known as MicroStrategy, executed a $21 billion common stock ATM. That's an at-the-market equity offering, and the proceeds were used to acquire an eye-popping 301,335 Bitcoin. This helped push their total holdings to nearly 1% of the global Bitcoin supply. During the same period, MSTR shares surged 50%. That rise reflects investor confidence in both their treasury execution and BTC's increasing institutional appeal. Strategy also introduced two new metrics to track its performance: BTC yield and BTC dollar gain. BTC yield hit 13.7% year-to-date, already over 90% of their full-year goal. BTC dollar gain came in at $5.8 billion, or 58% of the annual target, thanks to both disciplined treasury strategy and BTC appreciation. With this momentum, Strategy raised its BTC yield target to 25% and set a new BTC dollar gain goal of $15 billion for 2025. And that's not all. An accounting rule change allowed them to recognize a $12.7 billion uplift in Q1 due to fair value accounting of their Bitcoin holdings. While Q1 ended with a small unrealized loss due to a dip in Bitcoin's price, CFO Andrew Kang emphasized that the current market value, at roughly $97,300, would imply a Q2 fair value gain of $8 billion. But it's not just about balance sheets. Strategy's bigger mission is reshaping the corporate treasury model. Over 70 public companies are now adopting a Bitcoin standard, and Strategy is positioning itself as the de facto play for investors wanting exposure to that trend. And the demand for MSTR stock is broad. As of Q1 2025, the company is held by an estimated 13,000 institutions, over 800,000 retail accounts, and is included in more than 500 ETFs worldwide. Names include BlackRock, Vanguard, Fidelity, Norges Bank, and even pension funds like CalPERS and CalSTRS. In total, roughly 55 million people are indirect beneficiaries of MSTR shares. So, what does this mean for investors today? First, MSTR continues to be a proxy for Bitcoin exposure, especially for those who want BTC upside without holding the asset directly. Second, it gives exposure to rising institutional adoption. And third, with rising share value and increased liquidity, it's becoming a magnet for capital. Of course, there are risks. Bitcoin's volatility cuts both ways. And while the new accounting rules are a long-term benefit, unrealized losses like in Q1 still affect perception. But make no mistake, Strategy is executing aggressively. Their capital markets playbook is unlocking new shareholder value while growing their Bitcoin treasury at historic scale. Is MicroStrategy, now Strategy, the Berkshire Hathaway of Bitcoin? That's still up for debate. But one thing's clear, they're not just betting on BTC, they're building the financial rails for a new kind of treasury future. If you want more analysis on Bitcoin treasury stocks, BTC strategy trends, and publicly traded companies anchoring to Bitcoin, hit subscribe and join the channel. Until next time, keep your eye on the chain.